just feel what feels right and how to view things. So I'd like to know, in your mind, what is this methodology that you use besides this indicator you talked about? When you put all this information together, what is it? How does it all come together to you?
Okay, that's a really good question. And I think I have a pretty basic answer.
We love
And
simplicity. We love it.
yeah, I'm a big fan of simplicity. And one of the things that I look for, and I have a lot of different technical indicators. I look at internals, the percentage of stocks above the 20-day moving average and the 50-day moving average within the S&P. And I generally stick to large cap stocks as my go-to. And just because of where I was, we needed, the most liquid stocks. So I can understand them. I understand the sectors and such. But so I stick to a pretty narrow universe. I don't necessarily move from, the stock of the day to something new the next day. I tend to know my sectors, and I know the sectors that I'm best in. So there's that. But since I look at so many different technical indicators, what I like to see when I have a bottom, and I look at market sentiment when it gets washed out, you can look back in history and say, well, if all of these indicators were down here when we bottomed the last time, and I have about 25 that I look at, if they're all down here and these are doing the same things that happened the last time, and it took a couple weeks or a week or two or whatever for things to turn, that's probably a good buying opportunity. It's the same thing on the upside as well. And it's harder to pick tops, and I've picked tops and I've picked bottoms, and I'm right, I'm wrong. I generally get it pretty right. I've been wrong on a few times in recent years, with just being a little early on the short side. I was a little early on the short side in 2021. Nothing, terrible, but it all worked out. Actually, yeah, that was fine. But I look for things that happen together, and sometimes they're not necessarily all the same technical indicators. It could be sentiment, it could be different things. I mean, like a retail person could look at the CNN fear and greed indicator and look at market sentiment when it gets washed out or it's elevated. And sentiment really important, because a lot of people will they'll talk about market sentiment alone, standing alone. And that's not necessarily true, because sentiment can stay overbought or oversold for a period of time. It's when you want to see other types of indicators that come into the mix. And that's why the DeMark indicators for me work so well, because they're really dynamic and they're very sharp, and they can honestly pinpoint a turn in the stock. And it's not necessarily that if it's something's been going down, the smart buyers come in. It's actually the last seller has sold at the highs. It's the last buyers bought, and then it can come down or stall. And so I look at all these different things, and I want to see things happen together. And this year's been a little bit tricky, because last year had a really good year because we had these really good swings, and this year has been sort of this trend up in the NASDAQ, and that's been a very narrow advance. And I have on my Bloomberg, I can show, I do it all the time. I look at the attribution from the current of a period. So year to date in the NASDAQ 100, there's about 5 stocks that have attributed about 60% of the total gain. Just those stocks, and you know who they are. They're the Apples, Amazons, Tesla, Nvidia. You can look at a few others in there that have done a lot of the heavy lifting. So that makes it a little trickier, because then your performance, you're like, well, if I just was in those, it would be it's super easy. But now those are getting very extended, and so I'm looking at them as shorts, and I'm short some of them right now. But the point is, I try to combine a lot of different technical indicators and market internals, and managing them, and knowing through experience of what to weigh higher at certain periods is important. And there's not every time that I can get 100% of all of them working perfectly together. That's a dream, and that almost makes me a little bit more skeptical. But if I can get about 70% of the indicators starting to line up as a buy, I'll then start to add some new buying, some new long positions. It's the same thing on the upside as well. So I try to do that. I build portfolios where I don't like to have more than 20% max of one sector in the portfolio. At inception, I don't ever have more than 5% of the total weight of the portfolio in one stock. And a lot of times I'll start with 2%, a 2% size position. And a lot of people will say, "Oh, that's not going to get you that far." But if you do it enough, it adds up.